Mr. Chairman, I yield back.
Chair recognizes Mr. McHenry.
Thank you, Mr. Chairman. Were there specific details that the Federal Reserve and Treasury told you not to disclose to your shareholders?
No, sir. Neither Secretary Paulson nor the Chairman of the Federal Reserve, Mr. Bernanke, ever told me not to disclose something that we thought should be publicly disclosed.
Okay. Mr. Kucinich referenced some emails, and I just wanted to get on the record. Had you seen those emails before today?
No.
Okay. I just want to make sure we got that on the record, Mr. Chairman, with all due respect to you. And Mr. Lewis, as I asked earlier, you've been involved in a number of merger and acquisitions. Your institution's been involved in dozens upon dozens over your career with the bank. To your knowledge, have there been material adverse change clauses included in previous deals of this sort?
Virtually every acquisition would include some form of material adverse change clause, and it is not totally uncommon to have them invoked.
Has your institution invoked this clause before?
Yes, sir. We invoked it on a deal that was with Sallie Mae.
All right. And looking at the list of Federal Reserve regulators who are second-guessing your decision, or you're raising the issue of the material adverse change clause, it's probably fair to say that you've done more of these deals than they have in their careers as bureaucrats. Is that safe to say?
I'm sorry?
Is it safe to say you've done more deals that include MAC clauses than the bureaucrats that were second-guessing your decision?
I don't know their backgrounds.
Okay. Well, I understand you're still a regulated institution, so no need to hit on the Federal Reserve and their staff there. But there have been reports, to go to another subject matter, there have been reports about efforts of various banks to raise capital in the wake of stress test results. What's the status of your capital raising efforts?
We were asked, or we were required to raise $33.9 billion, and I'm pleased to say that we have raised that amount, and we will raise more than that. That should be completed sometime toward the end of this month.
Okay. My constituents are concerned about access to credit. We've got a mortgage foreclosure issue that's widespread across this country. Can you tell me about Bank of America's actions as it relates to foreclosure mitigation and helping those folks that are facing the loss of their homes?
One of the issues with the loan modification issue was that initially the banks were just not staffed up to handle that kind of volume and the different type things that were being asked. Since then, we now have 7,200 associates that just focus on loan modifications. And since July of 2008, so less than a year, we actually already have modified 311,000 loans.
Oh, Lord. There's been a discussion about access to credit and whether or not institutions are lending. With the downturn in the economy, certainly institutions have a more difficult time in a down economy to find credit-worthy individuals and make loans. Can you discuss the loans that you've made over the last 2-3 quarters?
Well, it's a great question, and it's also the key to us getting this country back on track, because if the financial system doesn't make loans, then we've got an issue. First, I would say I'm very proud that Bank of America is the largest lender in the United States. I'm very proud of that. Secondly, I can assure you that we're making every good loan that we can make. Simply put, banks take deposits and make loans. That's how we make money. So it's in our enlightened self-interest to do that. If we don't optimize our profits. But I will say, to your point, that in a recession that's this deep and this prolonged, you do get an issue with demand. People start cutting back, they spend less, and companies expand less. And so I can't assure you that these loan increases are going to continue because of loan demand. What I can assure you is we're going to make every good loan there is to be made.
Thank you, Mr.
The gentleman's
Chairman.
time has expired. Chair recognizes Mr. Quigley.
Thank you, Mr. Chairman.